My name is Christopher Terry, CEO of iMarkets Live, and tonight, February 4th, 2016, we have the live trading and the live London webinar, and we got a lot of beautiful people here with us. And guys, I'm going to do a little market geometry tonight and show you how you find patterns. Yeah, it's great to have a scanner. It's great for Chris to give you stuff. It's great for Emery to be out there in the trade house helping people. It's great for Scott to help people. It's great for our competitors, our friends out there to help people. But you got to learn how to feed yourself. All right, you got to feed yourself when there's nobody, when nobody else is around. I don't want you staring at the charts blankly. So what I'm going to do tonight is I'm going to show you a little market geometry, which we're going to do again on another class. But I want to show you how I use multiple time frame analysis to find opportunity. And I think once we put this together, a lot of things are going to clear up on how to understand how to look at multiple time frames. So, and please, guys, don't be typing during this time. Just let me focus on this. And if anybody else is typing, just tell them, hush. I know you can't see each other, but don't worry about it. So, a couple of things. We're going to look at price structure first. And I removed all the Fibonacci from here, but we're going to work with some Fibonacci. And if you don't understand it, don't worry about it, okay? You come back the next day and the next day. But what I want to point out is we look at prior swings, prior swing highs, prior swing lows. You got a swing high here and a swing low there. I'm going to take my time with this so you'll all understand it with me. I'm using NinjaTrader. It doesn't matter if you use NinjaTrader or MetaTrader or any other kind of platform out there. Just use something that feels comfortable for you. I love NinjaTrader, but I love MetaTrader 4, but I find value with NinjaTrader also where I can skim through some patterns. So what I did was, guys, we got a swing here. The last swing down that happened, okay, it happened in November. This is a daily chart of the EUR GBP, and it doesn't matter the time frame. You can have I just want you to have one high time frame, one low time frame. So daily chart, hourly chart, 15-minute chart, 15-minute chart, 5-minute or 1-minute chart. I want you to be able to have multiple time frames you look at, and sometimes I look at 4 screens or 8 screens. I'm in Vegas right now. When I'm in my other homes, I use 8 screens, 10 screens. Here, I got 3 huge screens. That's fine. It's plenty. It does the job. You could do the work on 1 screen. It doesn't matter. Whatever feels comfortable for you, you have to determine that. I personally, I like to have multiple screens. I like to have multiple monitors and multiple computers. The reason why I have multiple computers is for the obvious that you have backup, that if one computer blows up, you still have another computer also. The redundancy, the backup, it's important. Now, currently right here, I don't have that backup. I will have it in the next 2 weeks because I have stuff being shipped to me for that sole purpose. So I was actually speaking to somebody today about that. I have that being sent. So you're looking at the prior structure. This was a swing down. Now, when you have a market that shifts, it shifts its momentum. And I'm going to show you how it shifted in multiple ways. I'm going to show you where everything is starting to form a particular type of trend. So the market swung down, right? And then rallied. So let's just take a copy of that. And the next time that market turns down, you want to put an equal type of swing. Now, I do this also, and sometimes I'll add some Fibonacci to it. So Fibonacci, so let me show you a few things. And here's how I like to have my Fibonacci look. See, I could do this also. 113, 127.2, and a 1618. Okay, let me just give you some extension down here. I will save that little template. It's not responding. Why is it not responding? Sorry with this Ninja Trader tonight. It's kind of ridiculous. One more time. Manage template. All right, it's fine. So when you have this, I'm taking my time with this, guys, so I'm not going to go so fast. I want you all to see. This is called an alternate A to B C to D. Now, D can be extended. If this price was extended, it could extend here, or it could be shallow. And how that's written out is this. A to B equals C to D. So if we were to look at this, we would say 10 points equal 10 points. So if A was 10 points, B would be 10 points. That's how that should look. We also have it where, let's just say that price stopped at around, this is called market geometry, okay? I want you to be intimidated by the name, and I'm just sharing how we assemble levels of buys and sells that will give you accurate analysis so you can trade and be very successful. So this A to B, this is called an alternate A to B, C to D. Now, in its basic form, it's equal, but if it had come down to the 886 or 786 or 113, if we had relationships there, then we would put it like this: A to B equal, yes, it's forming an uptrend. That's the whole point. So is equal to C times, right, 0.886 equal D. So if the market went from A to B, if this is 10 points and the price came here, it would look like an A to B and then C times 886 equals CD. We could do it either like that. Okay, you could do something like this. Times, I do it a couple different ways. Times 886 equal that C to D relationship. So I don't confuse anybody. So A to B times 0.886 would give you C to D, but right here. It would still be considered an A to B, C to D structure. So I just want to let you know, I hope I didn't lose you on that, but don't worry about it. Let me take my Fibonacci away here for a moment. We'll get back to that. Let me just take some Fibonacci away. All righty. Enough already. Enough. So let's delete that. Keeping it pure price. A to B equals C to D. What happened was the market went down so many pips, rallied, and then retraced. If we were to take this A to B and we overlaid it here, thank you guys, I'm glad you like it. C to D, an equal swing, you can see how price came perfectly. And this is a trade we did yesterday. We did this yesterday live in the room, in my live New York session. So you got some love right there. You see that? So let's take our Fibonacci retracements. We take it from the low, and you can do this at MetaTrader, NinjaTrader, any trade, any platform. We run to the high. First couple things I look at is what lines up with that. Well, I'm looking at this, and I don't particularly see anything that would line up with this other than what we call a 23.6 to 23.4. We call it the 24% retracement. So I'll make that a 2, and I apply this. A little bit high. I throw the 38% in there. I throw the 38% in there. So I'm going to put this down at a 1, so it's not so important on the screen, but it's there. So we see the whole retracement zone. Yeah, it came down to 24, penetrated it, so we're right between the 24 to 38. Manuel, I'm showing this because it's actual trade we did, and it's actually setting up something new that I want to show you, okay? Then I got this retracement here to here. Okay, we got that. I get rid of all this, and let's put some value in there. So I want to show you how I set up trade ideas and what I look at when I look at them. It's called a little market geometry. Nothing so complex, and I think it'll be a perfect type of class for us. Now, eventually, this NinjaTrader is going to work. You just click you click on the chart, but I'll worry about MetaTrader for after that. Okay, we're just showing a little bit of it's stalling out a little bit, so just hold on. Okay. Yeah, this is all from experience. That's what I'm bringing to the table for you at night. All right, I'm bringing this to the table at night here in London session. I'm bringing experience. Okay, that's essentially what I'm bringing to the table, and the experience I bring will help you in the future. If you don't understand it now, eventually it will. I mean, we're going to keep going and going and going on this stuff, all different types of analysis, but really important. And I don't know why NinjaTrader is taking so long. It's like real weird tonight. It is what it is. Nothing I can do about it. Okay, so what we have here is I took the swing low, swing high, swing low, swing high, and I put levels to watch, levels that I deem important. I also like to look at prior swing downs, huge swings. You see this right here? I find value with this. So let me draw this, and let me remove all these other ones, okay? I removed the 100% line, okay? Up. Okay, whatever. There we go. I'm sorry about that. So we're all watching this also. As you see, this is an A to B. Well, you're always looking at swing highs and swing lows, okay? So I have a larger A. Look, we can do in the class. Look, the market's not even moving. You got your B. So we're looking at a much larger move. So I'm taking this and I'm overlaying this also. Overlaying that also. And this is considered an A to B, C to D also. And what I'm looking for is something to line up in here. That's all I'm doing. So I'm going to go and click the buttons and see if anything lines up in there. Because sometimes you get that. Okay, and I got it backwards. All right. I got it upside down. Leave it to me to do it upside down. I'm sorry, guys. Let me just flip this around. All right. Sorry about that. So I'm taking a measurement, a parallel line from here to here and from here to here, just to see how this lines up in terms of mathematics. 38%. Ah, you see that? 50% is a little bit deeper. Okay. All right. So we see that. I'm good with that. So what we're forming down here is what I like to call a commonality zone. Okay, a little cluster area. I like to look at it like this is what they call a cluster area, a commonality zone. Going to look in the past to see what's in the past. We want to look in the past to see what goes forward, okay? And we see swing highs, we see big swing highs, swing lows. You put your trend lines across. It's a little bit too high. I don't particularly see anything else. Let's look at prior swing lows. Okay, nothing else in there brings any interest to us whatsoever. So let me review what we did. Let me review what we did. We took the market high to market low. Don't worry about anything, guys. Okay, let's just start from the beginning. Price swing down A to B, price swing down C to D. Then we took the market low to market high, and we laid in a retracement level, 24%, looks like. Then we took the market low to market high, you laid in 38%, or 50%, I'm sorry. Then we took this big swing down and this big swing down, basically the parallel. So if we really look at it, that's also called an A to B, C to D. Except your A to B times 38% equals C to D. So in reality, this D is here, if you think about it. But we'll just lay this in here to keep it for argument's sake for now. So what this is telling me that this whole area is important to watch for retracement and that the market's holding. So yesterday, that's the daily time frame. So on the hourly chart, we did this yesterday. I looked at this, this, and the market started to run up a little bit. It started to go up a little bit right in here. As soon as it got back above this swing low here, it makes this a little bit thicker. As soon as the market, it tested, it did its little downside. And if you want, you can look at this, that maybe a form of a little butterfly pattern, if you think about it. And where you have these small harmonic patterns around turning points on the higher time frame, that's where the power comes from also. So you have these little harmonic patterns that are reversal points within the context and structure of the higher time frame. Think about that. You're getting a retracement on the higher time frame. Market's in what they call an uptrend. It's an obvious uptrend because the market went from B to C and it finally retraced down. Finally, it took forever, right? It took days, okay, month, or half a month. It retraced down here, bounced, came down again, and put a double bottom in. Doesn't look like much, but if you look at the lower time frame, you have what we call a harmonic pattern. It looks like a butterfly pattern. Very simple. Okay, X, A, B, so I'm not sitting measuring out everything. I'm just looking at the flow of the market, the structure of the market. Okay, that's how I'm looking at it. I'm looking at the flow of the market. And this hit played out. It hit its point, its ratios, and turned back up pretty quickly. I'm sure that if I was to take just Fibonacci and throw it in here, I can find the value below. Like for instance, that 1272 or there we go, a 113 extension. Maybe it wasn't such a butterfly, but you did have some commonality down here. So market shifted back above this prior low. The butterfly could have come a little bit further here, but the important thing is you see how it had that A to B, C to D. Market flew right back above that prior low. And when this happened yesterday, right here, as soon as it came back above, it was sitting there dancing back and forth. And we looked over here into the live trading room in New York. Like, this is a buy. This area is a buy. Okay, the reason why is because we have all this structure on this daily chart. The daily chart is saying that we got support here. You got multiple reasons. A to B, C to D, 100%. You got A to B times 38% of C to D. You got low-high retracement of 50%, low-high retracement of 24%. This is telling us that we got key support down here within the structure of an uptrend. You want to do that in an uptrend. Now, on the lower time frame, it stopped going down and it shifted. So we were fortunate to buy that. But what's the next play? Chris, what's the next play? I'm glad you're talking about what happened. Tell me what's going to happen and how do we take advantage of that? That's what I want to look at. Okay. So let's just run our trend lines so we understand what we're looking at. Okay, X, A, B, C, D. You can label them out. It's this right here that's important to me. That's what's important to me right now. I'm watching this. So here's how I lay this out, okay? Now I want you to see something. From here to here and here to here. So we're going to draw this out. Here, I'm going to color this differently. We're just going to color this differently. And I want to show you what's appearing. And make this a little bit thicker, as they say. Little kids are going to make it thicker. Real important, guys. Real important. If I could teach you anything else tonight, is the shift in momentum from down to up. This is called a shift in momentum. The swing up is greater than the swing down. You have structural support, which means you're in an uptrend, and the lower time frame trend found support. But what was real important when this shifted was this swing up was greater than this swing down. All right? You see this, guys? Does everybody see this right here, what I'm drawing out? I want you to print that in your brain. Okay? So let's do a little drawing out. Okay, market does this, market comes down, market does this, market does that. Okay, this is that shift in momentum. Big shift in momentum. So what we're going to do is we're going to take a retracement value from two places. Two places. We're going to look at retracement from here to here. I'm also going to make this a 24%. %, right there. And then I'm going to take this also. Now to get rid of all this here. I'm going to take that and I'm going to copy what I want to do. Okay. And then we're copying that. See that? Just like that? Just like that. We're going to take this as a 24 or 38%. I want to see where this comes in. And I got it upside down. Christopher, you got to stop making things upside down. Okay, we'll fix that, guys. Don't worry about it. Hold on, guys. Don't answer the questions yet. So I take this and I move this over. And you see what we're starting to see here, right? Commonality. Commonality zone, right? Here. Also starting to see a little commonality zone right in here. All right. So what I like to look at, the percentages are basically just basic Fibonacci levels in the market. All right. I'm not going to get too deep into them. But standard Fibonacci levels in the market, 38, 50, 618. These are levels that you find in nature, in architecture. They're just absolutely phenomenal numbers. And not to get into that tonight. Okay. But here's what I'm looking at. I'm looking at a market that says to me, I could have a shallow retracement, a very shallow, from here to here, or I can have a deeper retracement here to here. It's telling me most likely that I'm going to have more of a shallow environment, that if I'm going to trade it, I could start looking at buys here, and I can keep my risk away from everything. I can keep my risk away from everything. So if I have 70, 95, 75, 95, 75, 80, that's 15 pips, right? I could put my risk down here, out of the way. I'm not expecting it to come all the way down here again. That's not what I'm looking for. Okay, but I do understand that this right here, this was equivalent to this. Most likely because of the type of move it had, it won't come all the way down. So you have 75.50. So here's how I would set this up. And if you're experienced and you understand this, great. Okay. And because we're running into London session, okay, and here's your stop. So that's how you would structure, this is how you would structure a trade. So let me do this. Let me make a copy of this, do a little drawing. All right, we could have this, maybe it does this, or maybe just that retracement value needs to start the process higher. Okay, but that's what I'm looking at right there. You're looking at the higher time frame daily has shifted. I mean, the higher time frame daily has retraced down to an area of key support. You had a double test. The market started holding, and because you have the higher time frame structure, the lower time frame, when it turned up yesterday, we pointed all this out in New York. Okay, we pointed this out in New York. As soon as it turned, I kept on saying to everybody, buy, buy. This is going higher. This is going higher. Buy it, buy it. It's going higher. It's going higher. Buy it. That was my conversation yesterday. Just buy it, buy it, buy it. It's going higher. And then kick out some short longs on the way up. People were getting like off quotes and stuff because it was moving so fast. But you have a clear shift in momentum going from down to up. Clear shift in momentum. The move up was greater than that move down here. Now, let me explain something to you so you understand. All right, where you can have the argument where you have a downtrend, a retracement. You could have a downtrend, right? A retracement. And we still would look for lower swings. You see this? We would still look for lower swings. So I don't want to confuse you of a market that's in an absolute downtrend. Yes, that would be the case. If, for instance, we had this and the market's in a downtrend, I would look to short this up here, not buy it. But I look at the higher time frame structure where now you're getting this. Guys, I'm teaching you how to be rich tonight trading. I'm teaching you how to be very rich tonight trading, I promise you. So move down tonight, move down there, up, bang. So you have what's called an alternate A to B, C to D, and you're looking for support for the market to go higher. You see, when you combine them both, then you have that what we just did right here. That structure where the market came down, right? Turn back up, down, and shifted back up. So right here is this. So you're right here, right now. Okay, this is solid. This is in right here. It's not going anywhere. The market's not coming down here again. And you're looking for this to eventually take off and make new highs. I'm looking for it to move higher, like that, higher, and continue its uptrending mode, just like this did. This is obviously in a bullish mode. It's obviously going up. And yeah, I mean, I got the entries right there for you guys. So let me take this, and I want you to be able to trade this later if I'm not around. So I take a picture, I snap it right here, and I'm giving it to you that you can have some structure around. I just put it in your screen, so you can look at all the numbers here. Everything's laid out. You can just see it. Okay, all the numbers are laid out. So what do I mean when I'm buying half? Okay, and let's just say you're looking at MetaTrader 4. Okay, let's just say you're looking at MetaTrader 4. Okay, what do I mean by buying half? So let's just say I wanted to buy a mini. So you can do one of two things. When you buy a mini, you can just buy, right? You just buy. But what if you had two different zones to enter? But the mini was your trade. So okay, so my full position is a mini. I'm buying 05. Okay, I'm gonna buy 05 here, and then I'm gonna buy maybe half here, right? Right there. So I bought half and half, and then down here I'm gonna put a stop. Okay, I'll put a sell stop down there, and then what I'm gonna do is I'm gonna change that sell stop to modify that, because that should be higher. Okay, it should be a one limit, or I could just do this and I'll put a stop here. So just basically put it in the same area. So you buy half, you stop. Okay, let's go back. So what I wanted to show you tonight, guys, is the market is a buy. You would buy partials here in case you get a deeper retracement. You're buying more. You put your stop all the way down here, and you're working on an hourly chart. So this may take time before it goes higher, but that's what the ultimate thought is. If we start looking at it in Elliott Wave, you would have your retracement and your swing up. Retracement, swing up. So you're looking at Elliott Wave structure, okay? This is where it all starts. This is where it all begins, in here, and you're working within the context of the higher time frame. I wouldn't do a buy limit. I would be there if you do it, but you could do a buy limit. I mean, it's up to you. I don't do it. So you can put a buy limit here, stop. That's fine. That's fine. So how you would do the size is if you have 90 to 45, you got 55 pips, right? 90, you got 50, 90, 45, 50, 45 pips, I'm sorry. 40 pips on entry 1, And then on entry 2, you have 30 pips. Okay, so what we want to look for is what would add up to 2%, $20. Okay, what would add up to $20 per 1,000 to give you multiple entries of risk? Okay, we're going to do 2%. Oops. Ay, 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 2%. So our first one, we want to risk, on our first trade, we're going to risk, say 1% going down here. We're looking at 2 micros, okay, equal $9, equal 0.09, 0.90, 0.90% risk. We look at 30 pips, and if I wanted to risk another point, I could put 3 micros, equal $9, equal 0.9%. So I could have a total risk 1.80%. Do you understand? So you guys get that? So if you said, I want to risk 2.5%, I would go, or even go, I would go 4 micros here. I would have a $12 risk here. I would have a 1.2% risk there, and I would actually have a 2.1%, okay? A 2.1% risk. See that? That's how that would work. You're worried about the EURSD. I'm trying to just show you our structure on this. So hold on a second, okay? So all I'm showing you right now, and this is not scalping, this is for a bigger position, that you could take the model and you say, okay, I'm buying half here, I'm buying half, or I'm buying first lot here, and I'm buying this here. Buying 2 here, 4 here. So you understand when you're trading, okay, when you're trading, and the misconception comes in, that if you buy here, and you buy here, and you buy here, and you buy here, and you buy here, that you are scaling into a loser. If you have a full position, okay, if you have a full position of, say, a 1 standard lot or whatever, and you're putting a mini, a mini, a mini, a mini, mini, you're scaling into the position to obtain a full position. You're not scaling into a loser as you would in the stock market. That's different. This is, you're scaling into a trade. So I may buy a mini here, I may buy more. Look, yesterday, S&P futures in our live room, I did $355 real trading on 2 mini lots, okay? Small, okay, in the futures. But it took us like 15 minutes to make money. But I was prepared to scale in. We talk, because I know you got guys, I see guys here that are in the New York room. So you scale into a position. I like to scale into a position. Just because you buy here and buy here doesn't mean you're scaling into a loser. That means you're building a position. There's a difference. Building a position and buying into, investing into a loser, or scaling, adding to a loss. So let's just say that was one scenario. This is the other scenario. You have $1,000 to invest, and you invest your $1,000 right here. You're done. Now it goes lower, and you save money. You buy another 1,000. You're scaling into a loser because this was your original position. When you're looking at building a position, you're looking at a zone. Okay, you're looking at a zone. Okay, you're looking at a trading zone that you can enter into a zone to build up that full position. You guys with me on that? Building a position and scaling into a loser are two different things. But I wanted to lay this out for you so that you have the structure, the knowledge on how you can trade on your own, and you can look at why would I buy it up here now? It's stupid. Why would I buy that, right? Doesn't make sense. But if you look at the whole structure, this was key support, big deal. It doesn't matter if you missed it. This still has shifted the momentum. Any pullback should not make new lows, and we should eventually work it higher. And that's the thinking. So I'm going to take this, going to copy that, and I'm going to say that that's the end of the class. And I hope that you were able to get some value from this class that we did here tonight. My name